The window just opened. Not sometime this year, not eventually, right now. Silver got dragged back into the danger zone where the public sleeps, and the prepared move. If you own silver, or you're even flirting with the idea, the next few weeks can decide whether you feel trapped or you feel untouchable. Because this is how it always works. The crowd waits for headlines. We build our position before the headlines. Now watch the pattern. When the system gets stressed, it doesn't send us a calendar invite. It sends price spikes, currency leaks, panic narratives, and everything is fine speeches that sound like a fire alarm wrapped in a lullaby. You've seen it. Groceries creep up, rent creeps up, insurance creeps up, and suddenly your safe savings account feels like a bucket with holes. That's the event. The leak is already happening. The only real question is, will we be ready when the change becomes obvious to everyone else? Here's the mistake most people make. They treat preparation like a mood. They prepare when they feel scared. But fear is a terrible financial advisor. Fear makes you buy late and sell early. Fear makes you chase noise. We don't do that. We prepare like engineers. We measure, we build buffers, we stack options. And we do it while the room is still quiet. Let's pause here. If the next few weeks were a storm on the horizon, what would you rather have? Confidence or cash flow anxiety? Because that's what this is really about. Not a medal, not a chart, control. Fact, inflation eats purchasing power. Interpretation, most people won't notice until the bite marks are deep. Fact, debt loads are heavy everywhere. Interpretation, when the weight shifts, weak links snap first. And in those moments, tangible assets don't magically make you rich. They make you hard to break. Silver sits in a weird place in that story. It's not shiny. It's a pressure gauge for trust. When people trust paper promises, silver looks boring. When people stop trusting paper promises, silver stops being boring fast. Here's the open loop. The real battle in the next few weeks isn't the price, it's your behavior. Because the system's favorite trick is volatility. They shake the table so you drop your chips. They make you feel motion sickness so you hit the sell button to breathe. So we do the opposite. We build a plan that works even if prices whip around like a storm-tossed boat. Quick disclaimer, because we do this the right way. This is educational. We manage risk. Now, what matters? Liquidity, resilience, timing. Liquidity is oxygen, resilience is the spine, timing is the edge. Most people reverse it. They chase timing first, then beg for resilience, then discover they have no oxygen left. We flip it. We secure oxygen. We strengthen the spine. Then we look for the edge. Silver fits into that in a specific way, not as a lottery ticket, as a hedge with teeth, but only if we treat it like a tool, not a religion. If you've ever felt like you're late, good. That emotion is information. It means you've sensed the cycle turning. Now the question is, do we freeze or do we move with precision? Cycles don't care about our feelings. Cycles are like tides. They pull in and out whether we complain or not. When money gets printed, the tide rises. When confidence breaks, the tide rips. And when it rips, the people who built their boat early don't drown. They sail. Most people won't hear this message until it hurts. They'll hear it when panic videos are everywhere. They'll hear it when family members ask, "Should we buy something?" They'll hear it when the line outside the shop is longer than the line at the coffee place. And by then, the pricing isn't the problem. Availability is. And this is where people get fooled. They stare at the paper price like it's the whole story. But the real story shows up in friction, in delays, in spreads, in the little cracks that tell you the system is tight, even when the chart looks calm. If the price dips, but the dealer premium refuses to dip, that's a clue. If the price dips, but out-of-stock banners multiply, that's a clue. If delivery times stretch, that's a clue. Because price is a number, access is reality, and reality always wins. Now, I'm not telling you to panic buy anything. We don't do panic, we do preparation. But we do pay attention to the signals the crowd ignores. This is the whisper before the scream, and it's why the next few weeks matter. Not because the world ends on a Tuesday, because windows close quietly. First, the easy opportunities disappear. Then the average opportunities disappear. Then only the expensive, stressful options remain. So we position while choices still exist, and we keep our head while everyone else starts shouting. Here's another mental trap. People think preparation is a single purchase. They buy one asset and mentally check the box. But preparation is a posture. It's a lifestyle of keeping margin. Margin in your schedule, margin in your budget, margin in your emotions. Because when life hits, margin is what keeps you from making stupid, rushed decisions. So when we talk about silver, we're talking about margin. We're talking about the ability to say, I'm not forced. Forced sellers get crushed. Prepared holders get paid. Now watch this contradiction. When times are easy, everyone brags about risk. When times get hard, everyone begs for safety. Risk appetite evaporates the moment the room smells like smoke. So the winning move is to build safety before the smoke. Then, if the smoke clears, we're still fine. If the smoke thickens, we're the ones with air tanks. Think with me. Why do people run to tangible assets in unstable times? Because paper is a promise. And promises are only as strong as the issuer. A metal doesn't care who's trending. A metal doesn't apologize for existing. It sits there, stubbornly real, like a brick in a world of fog. That's why silver keeps coming back in history. Empires rise, currencies fade, systems reboot. Silver stays silver. But here's the twist. Silver isn't a substitute for discipline. It's a reward for discipline. If we buy without a plan, we're swapping one kind of chaos for another. So we build the plan. 4 pillars. Cash buffer, debt control, skill leverage, asset allocation. That's not boring. That's the engine. Because when a shock hits, the cash buffer keeps you from selling at the worst time. Debt control keeps the system from owning you. Skill leverage keeps your income from becoming fragile. Allocation gives your savings a spine. Now, where does silver land? Silver lands in the insurance with upside lane. It is not our only lane, but it's a lane we respect because it performs a job when confidence wobbles. And confidence is wobbling. You can feel it. People are angry for no reason. They're exhausted. They're snapping over small things. That's not random. That's what happens when life gets more expensive and people can't explain why. So here's what we do, starting today. We stop worshiping prediction. We start building structure. We don't need perfect forecasts. We need a setup that survives surprise. If the future stays calm, great. Our setup still works. If the future turns ugly, our setup becomes priceless. And if you're thinking, okay, but what do we do right now? Good. That's the right question. Because action without clarity is gambling. We're not gambling. We're measuring. Start with the cash buffer. Most people treat cash like trash. They chase returns, ignore resilience, and then one emergency turns into a forced sale. We don't do forced sales, so we keep a buffer that buys us time. Time is the only asset you can't refinance. Then we look at debt. Debt is not a number. Debt is a leash. High-interest debt is a leash that tightens when the world gets stressed. So if we can reduce it, we reduce it. Not because we're afraid, because we're upgrading our freedom. Now answer this honestly. If silver goes up, but your debt payments are crushing you, did you win? The market doesn't care if we're right on an asset while our personal balance sheet collapses. We build both. Next, skills. Skills are the highest yield asset that doesn't show on a brokerage screen. Skills raise income. Skills raise options. Skills make you anti-fragile. If the economy changes, the skilled adapt. The unskilled beg. So we don't buy things. We become someone who can always earn. And then we place silver in the frame. Silver can hedge paper mistakes, but it's also a test of patience, because silver can do nothing for a long time, and that's where people break. They want fireworks. They want dopamine. They want constant confirmation. But wealth isn't built on excitement. Wealth is built on calm repetition. Now, let's talk about the psychological warfare. If you own silver, you will be tempted to check the price like it's a heartbeat monitor. Up, you feel smart. Down, you feel cursed. That's the trap. The trap is outsourcing your emotions to a chart. We don't do that. We track the why. We track the structure. We track the conditions. Because the moment you attach your identity to daily moves, you become easy to manipulate. And manipulation loves emotional investors. It uses them as liquidity. Fact. Markets move on narratives. Interpretation. Narratives change faster than reality. That's why noise is dangerous. It can make us act as if reality changed, when only the story changed. Now here's a second open loop. There's one action that separates calm silver holders from stressed silver holders. It has nothing to do with the metal itself. It's position sizing. Most people go all in emotionally. They treat it like salvation. Then any dip feels like death. We don't do that. We size it so we can sleep. Sleep is a competitive advantage. If you can't sleep, your plan is broken. So we keep it simple. We hold what we can hold through volatility. We don't buy what we can't tolerate. We don't chase what we don't understand. And we don't let one asset become our personality. And we should be honest about downside scenarios. What if we're wrong? What if silver chops sideways and does nothing? Then our plan still works because we didn't bet our life on one outcome. What if silver drops hard? Then our plan shows its quality immediately. If our position sizing was sane, we can hold. If our cash buffer exists, we don't sell under pressure. If our debt is controlled, we don't get squeezed. If our skills are growing, our income doesn't collapse. That's how we stress test a strategy. Not with hope, with where will the weakness show first. If the first sign of trouble forces us to sell, the structure was weak. If we can absorb the hit and keep moving, the structure was strong. That's the entire game. We're not trying to be heroes. We're trying to be unbreakable. Now, I want you in the comments for this. What's the one thing you'd change in your money habits if you had to get storm ready in 30 days? And if you want more straight talk like this, hit subscribe. Short, simple. Do it now. Back to the plan. We set a baseline. A baseline is our I can survive line. Essential expenses covered for a period of time. No high interest debt bleeding us daily. A clear map of where our money goes. Most people don't have that. They have vibes. They have guesses. We don't run our life on guesses. We run it on clarity. Clarity turns anxiety into action. Then we allocate with balance. Because the world can surprise us in multiple ways. Inflation surprise, job surprise, market surprise, policy surprise. So we don't bet the farm on one horse. We build a stable. Cash, productive assets, some protection assets. And yes, for many of us, silver can be part of that protection bucket. But here's the trap that hits right after people buy silver. Complacency. They buy the metal, then they stop building skills. They stop reducing debt. They stop saving. They assume the metal will do the work for them. It won't. No asset can replace discipline. Assets amplify discipline. Assets punish chaos. So we keep building the boring habits. Now, a hard question. If your income stopped tomorrow, how many days could you stay calm? If the answer scares you, that's not shame. That's signal. Signals tell us where to strengthen. And strength is built before the test. The emotional cycle is predictable. When things feel stable, people laugh at preparation. Then stability cracks, and the same people call preparation smart. That flip happens fast, and it always happens when it's expensive. We want to be smart while it's cheap. Cheap doesn't mean price. Cheap means attention. Cheap means competition. Cheap means the crowd isn't in the way. Now, silver isn't magic, but it is real. And in a world of digital promises, real becomes a rare luxury. It's outside the system. It doesn't require a login. It doesn't require permission. And when trust gets shaky, that independence becomes valuable. But we respect the downside too. Silver can drop when you least expect it. So we build guardrails. We build psychological strength the same way we build a portfolio. Gradually, intentionally, with a plan. Here's the last thing you need to hear. The biggest threat to your future isn't inflation. It isn't a market crash. It's distraction plus denial. Distraction keeps you busy. Denial keeps you comfortable. Together, they steal years. So we do the uncomfortable thing. We audit. We cut leaks. We build the buffer. We invest with intention. And we hold our emotions accountable. Because emotions are weather. Our plan cannot change with weather. Now, one final question. If silver doubled, would you sell immediately? Or would you hold because you think the bigger move comes later? Tell me why. I want to see how we think, because thinking is the asset. And here's the cliffhanger. The next phase of this cycle is where the crowd gets loud. You will hear confident voices telling you to do extreme things. All in, all out, panic, euphoria. That's when we need to be the calmest people in the room. Because calm people buy when it's hated, and they sell when it's worshipped. So if you're holding silver, don't make it emotional. Make it structural. Build the base. Then add exposure. Then stay patient. And keep your eyes on the real scoreboard, not daily prices. Not trending clips. The scoreboard is your resilience, your cash buffer, your debt load, your skill stack, your options. Because when the next few weeks turn into the next few months, the world will do what it always does. It will surprise the unprepared, and it will reward the disciplined. We don't need a crystal ball. We need a checklist. We need a rhythm. We need a community that stays sharp. Lock in, cut the noise, measure the risk. Treat silver as one tool in a bigger strategy. Because when the storm hits, the people who win aren't the loudest. They're the ones who prepared in silence. And the silence is ending. Watch the next few weeks closely. The crowd is still asleep, but the cycle is waking up.